Okay, let's go ahead and get started. First of all, I'd like to thank everybody for coming tonight. We've got a full room, and so we're going to go ahead and record this event, and we're happy everybody could make it. We're actually pretty surprised about how many people have registered and attended the event tonight, and welcome everybody to you. Hopefully it'll be well worth your time. I know it will be. My name is Jeff Gibby. I work in business development at Metastock. I'm pretty excited personally about the relationship that we've developed with Price. It's a new relationship and something that we think is going to be very, very beneficial to everybody. There's just a couple of items of business to do. I'm going to basically have four PowerPoint slides that we're going to go through here at the start, and then I'm going to turn the time over to him. The first thing that we always do whenever we do one of these workshops is we always do our disclaimer. So let's go ahead and get that on the screen. Disclaimer: these workshops instruct you on using Metastock and the accompanying software plugins. They're not a recommendation to buy or sell, but rather they're guidelines to interpreting and using specific indicators and features within the software. This information, the software, and the techniques presented at the workshop should only be used by investors who are aware of the risk inherent in trading. Equus, Priceedly, and Big Trend shall have no liability for any investment decisions based on the use of the software, the trading strategies, or really any other information provided in connection with the company. So, really kind of everybody in here should be pretty aware that it is possible to lose money in the marketplace. It happens, and let's go ahead and get started. Like I said, I just have a few words that I'd like to talk about Price. Priceedly's appeared on CNBC, Fox News, CNN, FN, and Bloomberg TV. He's, if you name it, if it has to do with financial, he's probably appeared in it. He's done a number of articles in a number of different magazines. There's a company out there called Timers Digest. They follow people's investment advice and their strategies, and they rank them according to how well they performed or didn't perform. And one of the really exciting things about kind of this is that Timer Digest has ranked Price as one of the top 10 market timers. And that goes really to say a lot about kind of the work that he's done. One of the nice things, and we're going to talk about, is some of the indicators and things that he's used in the past. He really did put a lot of his research, a lot of his time, and a lot of his experience into a new product for Metastock that we're pretty excited about, and we'll let you try at the end on a money-back guarantee and with a discount as well. In any case, I'm going to go ahead and turn the time over to Price, and we'll go ahead and get started. Thanks everybody again for coming, and here we go.
Thank you to Jeff, Kelly, and everybody over at Metastock for setting this up. This is a great opportunity to get really just a free lesson on a totally different way to look at the markets. And the really exciting thing, I've been trading the markets now for 17 years, and basically what we're looking for is really strong trends in the market. That's where I've made the best money in the market. So tonight I'm going to share with you my favorite technical indicators. And the great news is that now all of my favorite proprietary indicators are available via the Metastock platform, via a plugin that we've just created that Jeff and I and a lot of the crew at Metastock and Big Trends worked real hard on, called the Big Trends Toolkit. Let me just move the slide, and I know I need to pause for a few seconds as I move slides. So you'll hear a slight pause in between slides. And by the way, if for any reason anybody would get knocked out, basically I want to encourage you to basically make sure. I'm going to bump up my volume a little bit too, by the way, here. Hopefully that will be a little bit better because I'm talking pretty loud, so hopefully that just helps you. I just bumped up the volume here to its maximum. Hopefully it doesn't blow your speakers out on the audio. But basically we're going to share with you, and I'm going to switch the slides here, and it'll take a little second. If you'd like a copy of these slides, I'll send you a copy of all the slides if you just email me to my email address, price, Price, @bigtrends.com. Let me just make sure I've got my mic I've got audio out all the way maxed up here, so I can't make it any louder. I'm going to talk as loud as I can without throwing my voice out here. So hopefully this is helping most of you. I'm trying to get it as close to my mouth now as possible too, without spitting in it. So basically, here we go. Let's go ahead and get started. Okay, I'm just going to have a little hesitation so that way I don't talk over everybody's switch over on the slides. But what you notice here is hopefully you can see my arrow, and my arrow basically I'm pumping up my sound. My sound is all the way maxed up, by the way, Allison, so we are maxed as high as we can go right now. Basically, what you see here, I've blocked out this BTTK is the Big Trends Toolkit is what the BTTK stands for. What you notice here is that includes all of my favorite indicators, some of which you probably haven't heard of if you haven't read my book, Big Trends in Trading. And even then, if you've read my book, we have a situation in which I'm just looking at the BTTK all the way here in the middle part of the slides, and you can see acceleration bands. We're going to talk about those tonight. This was one of the unique tools that I created, and basically it's a tool in which it gives us the ability to find accelerating stocks at the very top where I've highlighted that in blue. It appears maybe my arrow's not coming through, so basically I will try to, let me see if I can annotate here. That may help a little bit. Pointer cursor. There we go. Let's try that. That should help. I'm learning the technology here. So we've got the pointer cursor. We use a 20 and an 80-day acceleration band as a couple different indicators. We'll talk also about the DMI, Directional Movement Index difference. That's a very useful indicator that you can follow. The efficiency ratio, finding very efficient trends. We don't have time in this hour to talk about all of these tonight, but basically, so force index is something that Alexander Elder developed, and momentum divergence is another divergence tool I developed. We're not going to talk about that, or the NASDAQ relative strength, but we are going to talk a lot about the percent R indicator. Percent R is a very, very useful tool. That's really become one of my favorite tools here in order to allow you to really key on the markets. So basically, percent R, we're going to talk about, in addition to, I'm playing with the annotation feature here, we're going to talk about acceleration bands, DMI difference, efficiency ratio, and then I'll also give you a couple bonus picks based on the percent above the 200-day indicator. So we're learning as we go here on this platform, but basically we're going to share with you some of my favorite tools, and then I don't cover stochastics tonight, but I use stochastics in a very, very different way from the rest of the crowd. So we're going to talk about all of those here tonight, and basically the Metastock folks will be also sharing with you the recorded presentation. So hopefully, and I'm going to try to take my time, so they'll email you the link so you can get all of the copy of all these slides and the audio tonight, they're telling me. So that's very, very good news for you to go back and review these concepts, because these are new concepts. I mean, the things that I trade, the indicators I use, are typically things that nobody else is using, because I want an edge. Don't we all want an edge when we're in the markets? We're looking for things that give us a meaningful edge, that gives us the ability to take money out of the markets consistently over time. Doesn't mean that every trade's going to win. It's not. But we're going to talk tonight about when it doesn't work, where do you get out? So how do you manage your risk? So that's also very, very important. So, we're at a maximum room size tonight. We're maxed out at over 100, which is usually our cap. So we're going to go ahead and jump right into it here on our next indicator. Okay, first we're going to talk here about acceleration bands. The whole idea of acceleration bands is I want a trend line, a trend in a stock really, to start to speed up as we go. So I'm looking for that type of a speed of movement. When I'm trading options, which I know a lot of you are interested in not just stocks but also options, I want trends that are going to speed up as fast as they possibly can. So that's what I'm really after, is speed of movement. That's going to make me bigger profits. When I first started trading, I started trading with moving averages. But what I found was that the moving averages just by themselves are not going to give us enough of an edge compared to other indicators that might have a much stronger edge. So we're out actually looking for these trends to find the best stocks. I don't want to just trade any old stock. I want to find the best stocks. And what I noticed was the best stocks usually don't come back to test the same moving averages. That if we're seeing a stock come off the 200-day moving average and then it starts to heat up, it's probably not going to give you that opportunity to come back to the 200-day until the trend's starting to break down. You'll notice that maybe it goes up and breaks above the 200-day, then it maybe comes back, settles at the 50-day, then it moves up again, settles back at the 20-day. Then you see these parabolic type of moves in stocks. I need a way to get on those parabolic moves. So back in the early 90s, when I was missing out on some of the early big movers like Microsoft, and early on in the 90s, I got it later in the 90s for the biggest part of its move. But I started testing the adaptive bands, like Bollinger Bands, because I noticed that Bollinger Bands seemed to pick up, when they started to really expand, they seemed to pick up some dramatic price movements over short periods of time. As I looked into them a little closer, it seemed like they would pick them up for that first wave, but then they would miss too much of the wave. They'd miss too much of the big move. I needed to have a way to stay with the big move. So from that perspective, what I was looking for is some slightly different band was going to be picking up the same idea of a major breakout, but then staying with it, staying underneath it on an upside breakout. And that's where I came up with acceleration bands. Just like Bollinger Bands, they should encompass 95% of the action. So we're looking for something in which we're going to see basically most of the action contained within the bands, and then we don't want to trade that. In fact, if I go to my next slide here, I think I have to actually switch it back over before there we go. Let's switch to our next slide. If acceleration bands encompass 95% of the price action, guess what? That's what the market expects. There's not a significant edge for me doing what the market expects. But there is a significant edge if I trade the other 5% of the bands moves that are happening outside of the acceleration bands. Not inside, but outside. That's really important because I don't really care about what's expected. I care about what's unexpected. George Soros, the famed hedge fund manager, was the one who said, basically it was these unexpected. And that's the key word there, unexpected. Not expected, but unexpected. Substantial moves. That's where he made the most money, like when he shorted the British pound back in the mid-90s and made $1 billion shorting the British pound and broke the Bank of England practically. Well, that's a situation where, he was picking up a downtrend and basically pressing his bets in that downtrend because it was just a dramatic move to the downside in the British pound. Well, in statistical terms, you'll hear the term used, fat tails. And we're talking about stocks, we're talking about extreme moves outside of 2 standard deviations. They're only supposed to be happening, what did we just say, 5% of the time? But basically, it's a situation in which we have actually them in reality happening about 3 times wider or fatter. More like 15% of the time you're seeing 2 standard deviation moves. And that's where you'll see the best opportunities. So you've heard the phrase that markets only trend 20 or 25% of the time. Well, we're really only looking for that top 10% of the time where we get the best trends and we leave the chop to everybody else. Jeff's going to be telling you about the toolkit offer where you can actually get the toolkit with all my favorite indicators that we're talking about here, 14 different indicators, plus all the explorations, which is, to me, one of the best values of it, where you can go search for every day's information. Usually it's in the neighborhood of about $449, but basically it's $349 for today only. So Jeff will tell you about that at the end of the presentation, how you can save yourself some money. But let's show you some indicators here. Let's look at them. I don't know what's happening here. 1 second, I'm trying to get back out of that mode into something else. Bear with me. Oh, how do I get, I'm trying to, 1 second, trying to undo that. For some reason, it's got me stuck on this orb, and I can't seem to escape it. There we go. Well, now I'm in an arrow. 1 second. There we go. Okay, so we finally gotten out of that. Let me see if I can actually get my annotation tool back to something reasonable here. 1 moment. Huh. Okay, well, what we're looking at here is we're looking at, you now have me with this little arrow. We'll have some fun with this, I guess. I'd really prefer an arrow. Let me see if I can do an annotation instead. I don't know why it's not getting me out of that. In any case, and how am I finding the other 5% of the moves? We're going to talk about that in a minute. But basically, what we have here on this chart is we have Google. Google had been picking up bullishly from under $500, and I'm going to show you that here in just a second. If I can just get that thing to change back to what I had before. 1 second. I've also expanded my screen for a second here, make it a little bit more visible. And let me see if I can actually just get rid of that annotation. This, for some reason, will not change. Okay, well, anyway, what we're looking at is we're looking at a situation here in which you can see I've got my acceleration bands here in this green line here. I'm tracing on the upper band, and you can see we recently broke out for 1 and then 2 closes on that second red candlestick right there. That was a breakout above the upper band. What you notice is that I'm looking for those unusual moves. You see, most of the time it's kind of holding inside these bands. You can see that the lower band pretty much holds as support. The upper band usually holds as resistance. You know, 1 bar does not make a trend. I need to see 2 bars in order to make a stronger move here. So basically what I'm looking for is I'm looking for a situation in which we can see this kind of a strong breakout. So we saw 1 bar, and then the second bar closed above there. We were right about $497 on Google, right back here on that red bar. And so let me see if I can change this at all. It's moved me into a full screen mode, and I'm not sure how to get back out. So basically, what we have to do is we have to be in a situation in which we're looking for these breakouts. You can see that from 496, 497, that Google came right back, and this was early last week. You see, look at how it tested that lower band. If I put the middle of this orb on it, basically it tested that band right there at the low, right at $500. Here we are, right at $500, just a hair below. Monday before this past one, a week ago Monday, that was when we were getting that big China sell-off. You remember that? We were seeing the big China sell-off, and I'm sorry, I'm not sure what just switched on me. 1 second. And we were seeing the big China sell-off, and I'm trying to just figure out maybe how to get back out of this. 1 second. We're seeing the big China sell-off, and the market pulled back hard, and Google barely pulled back right to that upper acceleration band. You see it's touching right into that upper green boundary. That was showing us the major support holding for Google, even as the rest of the market's panicking, and Google in 2 days went from 500 to 518. That's an 18-point move. While it's only about 3.5%, that's still a very, very substantial move in just 2 days on Google. You know, at that point, when we were testing 500, I was buying in the money 490 calls down below the market right here at 490, and basically with the 10 points in the money option, it was costing me quite a bit. It was costing me about $18 for that to control 100 shares of Google. People would say, well, why would you ever buy an $18 option? Well, the whole idea is that we're looking for, you know, how much can we control the stock? Well, an $18 option on a $500 stock, I'm still controlling the stock for about 3.5% of the total stock's value of what I'd have to sink in if I was buying the stock outright. I paid $1,800 to control a basically $50,000 investment of stock. So basically, I'm controlling it for a lot less money. So that's really the great attraction of options: is you got a lot less capital at risk, and yet you still get to participate on the upside. As the stock went from 500 to 518, that 490 call was intrinsically worth at least $28, and it had that time in it where I think I was trading at about $32. So I didn't quite make a double on that move, but I made a near double on that move just in a couple of days, 18-point move on Google. So you can see some of the other moves that happen back here where we get the first day and then we get an extension breakout. Sometimes you want to wait for it to pull back right near the bands, and that's going to lead us to also talk about the indicator up top, the %R indicator, in our next slide. But you can see that generally speaking, the first rule of thumb is that 2 closes above gives me my first sign of an acceleration breakout. Then a lot of times what I look for is a retest back into these bands as a great low-risk entry point, and we're going to talk about %R next as another way that I get on board these moves. So what I'm looking for on %R, this is a typical overbought, oversold indicator. And basically what we have is %R is very similar to stochastics, in which you're typically just looking to measure overbought and oversold levels. So from that perspective, we're saying, okay, if we're looking for overbought and oversold levels, usually if I told you something went overbought, what would you say? Would you want to buy it or would you want to sell it? Most people have been trained, if it goes overbought, you sell it. And same way they say, well, if it goes oversold, that means maybe it's washed out on the downside, maybe you should buy it. But I've noticed something very different, and I'm going to share that with you in just a moment. Now, what I look for, most people would use maybe a 10 bar, maybe a 14 bar, maybe a 20 bar setting, but I tested a lot of different settings on %R, and we call it Williams %R because Larry Williams developed the idea, but basically it's very similar to stochastics, that the 30 bar setting actually works better than the other settings. So basically, from that perspective, we have a situation here in which 30 bars is my preferred setting. It's smoother, but it's still very responsive. So that's what I'm really looking for. So here's what I look for, and these are my rules when I'm looking to get into one of these unusual, or what I would call extreme, major trends. If you get that first quote-unquote overbought signal above the 80% threshold, and then you follow that bar's high, whatever that bar's high is when you get the first quote-unquote overbought reading, that's what we call the setup bar. So I can see Jeff's trying to get me back out of this mode here, which I appreciate, Jeff. I'm not sure how I got locked into this, but it's got me locked to where I don't seem to be able to get back out of it. Hopefully everybody's able to follow. Whatever that bar's high is, the first bar that we go above 80%, which this is the top 20th percentile, if you will. Some settings you'll see go from 0 at the peak down to minus 100. If that's the case, then the 20th percentile, the top 20th, would be at minus 20. So you'll follow along with me here in a minute. Then basically what I want to see is that bar's high, whatever that bar's high is, if we get a close, not an intra-bar action, but a close above that bar's high, then that is a bull trend to me. That tells me that it's not the top of the trading range. It's actually the start of a potentially bigger trend to the upside. So that's what we're looking at here, is an unusual bull trend. In the same way, on a bear trend, if it goes oversold, and then whatever that bar's low is on the bar that we go quote-unquote oversold below the bottom 20th percentile reading, which if it was the 0 to minus 100 scale would be minus 80 instead of 20. These are assuming 0 to 100 scales, 0 to plus 100. Well, then you're at the bottom 20th percentile. If it breaks below on a closing basis, below that bar's low, then I get bearish as a bear confirmation. So let's look at how that works. Here we have Google again. Notice, a couple different times with Google, you see, for example, where %R breaks out, like back in the very left part of the chart, right on that bar where it went up, and this, you can see here's a scale from 0 to minus 100. So the top 20th scale here would be a reading of minus 20. The bottom line is it's the top 20th percentile. That's that top blue line going across here. What you notice here is that when we first go overbought, That's happening right on this bar. So this bar's high is what I used. And notice what happens on the very next bar. It closes above that bar's high. So we are bull confirmed at that first point. That's where you could add, if you're an option trader or stock trader, what I usually do is I add half of my position when I get that bull confirmation. Because it's entirely possible that it could just run away to the upside, but basically never give you a retest back down. My first stop is the first setup R's low, which is back here, about $385. Now notice, okay, you're buying there in the neighborhood of about 408. Well, at 408, it runs up to about 418, and then you get this slam down here on this bar. That's where it sets our next retest. This next, anytime that it breaks back under the top 20th percentile, you know, when I first was testing this indicator and playing with it and starting to learn about it, I thought, well, oh, that must be bad. If we come from out of the overbought zone where I'm saying the stock looks so good, then maybe it doesn't look so good anymore, so maybe I should sell there. But what I noticed was one of the really cool things about %R was that on each of these tests down using a 30-bar setting, if you sell there, you're panicking with the rest of the crowd. Remember, it's the market's job to test the bulls and the bears. If it's a bull trend, the bears are going to take some shots to test that trend. Here's one of those tests where you get a big pop down to that low, which is right about $395, just under $400. You know, I'm looking for an arrow on the annotation tools. Let me just see 1 second. If we hit an arrow, let me try that. There we go. I think Jeff just got me out of that. Thank you, Jeff. Okay, now we're back to the arrow. Hopefully you can you see this arrow okay? Basically, if we're looking at this arrow, and we're looking at, okay, this low now becomes our new stop point. Let me just see. I can't read everybody's comments, so I'm flying a little blind here. Basically, let me see if we can come back out so I can see everybody's comments. 1 second. Bear with me. We're on annotation tools. We come out of that. All those are just markup features. Okay. So basically what we're looking at is a situation here in which we have a retest right on this low. So that's our new stop. Guess what? If you weren't already in this trade and you've been bull confirmed, what could you do as a retest? Well, remember, I said I had half on the first confirmation, but then on the retest, this is where I add my other half position, right down here into this test just under $400. So basically, that day when I'm seeing that retest, I'm adding it there or the next morning so that basically I know I've got a very low-risk stop. So from that perspective, that's what I'm after, is that type of a low-risk retest situation. So that will make things a lot more effective for you as you follow along and basically can really allow yourself to do that. Let me close annotation tools. Maybe that'll get me out. I'm hitting escape, but that's no luck there. So basically, what we're looking at here is that's right on the very left side of the chart. Notice we go flat. The rest of September kind of just flatline. %R is staying underneath that top boundary, but then it takes off again, and we then break back out above it. We get another test right back into it right in here in mid-October, and that low again sets up down just under 420 is another stop, and then it holds, and we take off on the big earnings-related gap. We get another test right at the end of October. You see how we come down below that level, and basically it allows us to get yet another opportunity to get another retest point. On each of these retest points, by the way, folks, if you weren't already in the position, how many of you have ever had that experience where you're just frustrated and missing out on a big trend like this? Guess what you can do? Basically, on each of these retests, you can basically say, well, guess what? I want to get into the position with relatively low risk, and then from there, we can actually get a situation in which we can really we can basically get a great situation here in which we're able to, I'm sorry, I'm trying to figure out this full screen. There we go. This gets us back out of full screen mode. Sorry about that. Each of these retest points on the hand, there we go. We finally figured that out. I'm technologically challenged sometimes on computers. Sorry about, here we go. Okay. So each of these retests I was pointing out, every time it comes back under that top blue line, notice where that's happening. right at a key low. Next time it comes back, right at a key low. If it violates that low and it closes below it, you have to get out. What determines that it's a retest is that you've been above on a bull confirmation, and then it comes back below that point. Every time that happens after you've been bull confirmed, that's what sets up a retest. If it pops just above that top threshold, but then we didn't get this confirmation with this closing high, it closed above the prior day's high, then that would not be a new retest because it wouldn't be bull confirmed. We're bull confirmed right there, so then each retest becomes a valid point where you can re-add to a position, or if you've missed a part of that wave, and it should be happening, by the way, at higher and higher lows. That's the definition of an uptrend. So you're not going to be able to buy as low in late October as you were able to buy back in mid-September. That's just not how uptrends work. You have to buy at a higher low, and that's what this gives you, each higher low. Now notice, the next time, say you've missed the prior three, and let's just say you're thinking, well, this next retest ought to hold. That happens right here in late November, and then about 4 bars later, it stops you out at about a 2-point loss on Google. That's not much risk on Google, and you could have more risk than that. I mean, I'm not saying, you're waiting for the close. It's possible it could have a real nasty day down, and you might get out down here at 460 instead of out here at about 475. But the bottom line is that, it does tend to keep your risk down, and you can see here, like this last test or two that we got in April, every time if it goes above that top 20% threshold and then it doesn't follow through and then it drops back down back under it, you just turn off your setup and the setup's not confirmed. It shoots above it right before the earnings, and it breaks right back below it, and then it pops up on this earnings report in mid-April, but notice it doesn't even follow through back above the 80 threshold, and it's dropping off. You're not interested in that. Same thing when it breaks back under the bottom threshold down here, right off of these lows, you're not interested in that either. You just got to follow through. You've got to get that confirmation. Well, that's what we got here, as you see that last breakout. This actually happened the day before the acceleration band breakout, and then it went bull confirmed the next day at about 496 right here on the first acceleration bar up. Now notice this red candle here right at the end of May, right on the far right side of the chart. Look at the retest that we're getting back underneath our upper top threshold. That was saying you could put on a trade right there into that negative red-looking candle, and notice that was happening at 497.06 was the low. I remember it well because I was adding to that position. I had half on just here on the first breakout. It was confirmed by %R, and then I had the next retest the very next day. I was buying that next morning, just around 5:01 actually, and then notice that the next morning after that, it dropped a little bit intraday, but reversed, closed up at like 5:08. Next day, it's 5:18. Bang, bang. 2 big days up. You're loving that kind of a move. Okay, so that's %R. I think I've got a bear example here on our next chart. 1 second. Okay, this is AMR. American Airlines. And you can see, by the way, on the left side of the chart, we had a very bull period for AMR back from September, October, November. Wonderful retest bullishly after it had gone bull confirmed. And then basically, you can see where it finally broke down back in this area right about here in mid-December, and it broke down about 3 bars later. Then you were done. Then you got a reconfirmation away back into the trend right back here about early 07, and it went bull confirmed there, gave a retest. Bull retest right here where we started to bounce off of it, but then our next retest from above to back below was violated right in here. And it never gave a new signal back in February before the big plunge. Then you see the first plunge in late February that takes it down under this bottom 20th percentile reading. The acceleration band setting I use, by the way, on this chart is a 20-bar acceleration band. It's my favorite short-term acceleration band. I also look at an 80-bar, but this is a 20-bar. So what I'm looking at here is that when we break down right here, you can see it breaking down, and in the very next bar, it closes underneath that bar's low. That is the bear confirmation right there. Notice, every time you get a retest, you're setting up for a low-risk reentry point for puts. Now, with the stock at about $32.50 to $33, I'm thinking, well, here we are early March. I'd typically, as an option strategy, be buying out 6 weeks or so that would put me out to the April options, and I'd be looking on each retest of maybe the end-of-money 35 strike. Right here happens again right in this area, mid-March, and then we actually do get stopped out slightly right here. And the beautiful thing about this indicator, you make a little bit of money in this first move down, But look at the next breakdown. This is the setup bar that I've drawn with this vertical blue line is on this setup, and then it confirms the very next bar. So you could add half of your position there, just under $30. Breaks down a little further. Look at this one green bar up here in late April. This one big green bar. These are short covering bars where you see the snap right back above our lower boundary. That's our next bear retest, where you could actually add to a put there at the close or the next morning's open, about $29. Again, you'd be probably thinking in mid-April, probably about the May 30 strike puts. It went from 29 down to 25.5 in about 4 more sessions. So it's a very, very useful approach. And so that is a way in which we do things. You can, through my coaching sessions, I go through and show all the entry and exit arrows across a whole period with price values. We also The beauty of Metastock, by the way, folks, is that you can actually go do your own testing, and you can see, and I've had people that confirm my testing from my coaching clients who say, yeah, I went through and tested it across a large number of stocks, and they see how well it works on percent R, on efficiency, on a lot of these different tools, depending on what you're looking for. So that's what we're after here. Okay, so you see how that popped. Where would you finally get out of this trade? Well, you got your next retest back here in early May. You can see that one held, so you keep on dropping, and then boom, we pop above there, right back here about $27.50, and it stops you out about $28 on your final piece of the position. So my goal is typically to sell half of my position at a double, and then basically, after that, it really is a situation in which you can get, basically ride the rest on a big trend, or, stop yourself out on the final piece when it stops out. The beauty, if you get out a half and a double, is it gives you that flexibility psychologically to ride the rest of the trend. Because think about it, if you sell half and a double, you get all your risk capital back. I think I've got a slide on that in here, so I won't hammer that too hard here because I want to spend time on it. Let's go to our next slide. Someone asked about commodities too. Same principles apply to commodities. You can use this across any commodity. You can also use it across any time frame, weekly, daily charts, on down into intraday charts. So when I ask people, if you're going to buy options, if you're buying call options, obviously you're expecting the trend to go up. If we've got a volatile stock in red that's got a lot of jagged moves, compared to, say, if we're starting at the beginning of the period and we say, well, instead of the stock in red, what if you had a stock in white, just to compare them, that was not so volatile, it's kind of slower, but it was making the same move from the beginning point here on the left to the end point on the right. You don't know every squiggle of each of these stocks, because you know they're going to end the same, but then in the options pricing model that the red stock options are priced more volatile because they know that red, say it's a tech stock, it's going to have these wilder moves. Well, it's going to probably cost you twice as much to buy options on red compared to white. And you say, well, which one would you rather buy calls on to get the maximum return on your investment? Would it be white or would it be red? Well, a lot of people in seminars that I do will typically say, well, red, because it's got all the volatility, and everybody's trained that volatility is what you're after. But quite honestly, volatility is not what you're after. Frankly, what you're after is the trend. The stronger the trend move, that's where your edge is in buying options. And basically, the options pricing model that the Nobel Prize was awarded to these guys in '97, they went off and started long-term capital management, and in a year after winning the Nobel Prize model, they were bust. They were belly up. Why? Because they assumed that trends don't exist. They just bet on volatility being too extreme and sell high volatility and buy low volatility. That doesn't work when you have strong trends. They got on the wrong side of trends, and they got busted. You cannot be on the wrong side of the trend. You want the trend to be your friend. It's really what I say, the trend is your only friend. And basically, you've got to make sure that you line that up. So what you notice here is that if I pay twice as much for red's option to pay for this volatility, but I get the same move, then white is going to give me twice the bang for my buck. And we talk about very efficient price action. I want to see that kind of consistency in the price action that white shows you here, where it just steadily makes its way up. That kind of consistency is going to be much more favorable for us to stick with a trend without a lot of noise, a lot of chop. So This idea led to my efficiency ratio. I can't give out the formula right here, but you get it when you buy the plug-in. You also get it with my DVD course, 15-hour course, taking you through these kind of principles and allowing you to just keep repeating the principles. But I believe that really repetition is the mother of all skill. You've got to have that hammered home in your brain in order to allow you the ability to really make the right moves under pressure when you're making trades in the live market. But what you notice here, what I noticed was the basic concept of efficiency is that if something's making just steady moves up without a lot of downside progress, it's going to come up on my indicator as a very efficient kind of a mover. Notice Amazon's starting to move up kind of slowly and steadily. We get this pop above the plus 30 threshold on efficiency happening right here. Remember what I said about confirmation. What I like to see is that it confirms with a close above this initial setup bar's high on April 2nd. That happened the very next bar on April 3rd. What you notice is that that's happening right in front of the breakout above the acceleration bands. So acceleration bands were really my first indicator when I wrote my book that I really keyed on as a breakthrough indicator. But since then, I've developed a lot more indicators, which now they're all available in the Metastock platform. So what you notice here, and Jeff's going to tell you about that special offer. And remember, if you want to get a copy of all these slides, just email me, Price, P-R-I-C-E, at bigtrends.com. It helps me if you just put slides in the title, and we'll get you a copy of the slides sent out tomorrow. But bottom line is that, you see it's broken above the acceleration bands here. And notice how it's just holding. We break out on the 16th, kind of settle back right in front of the earnings. You come back right near the bands here, and then boom, it takes off. Notice how the efficiency is just staying here above the plus 30, this red threshold. And that happens even though we break slightly back in the bands. We're still very efficient. That's why I've learned to add these filters in to support and not just use the bands. But you can see there's our retest happening right on this low when we test just back under the plus 30 threshold. That's on this low. If you're drawing a straight line across there, notice it comes close to testing it and tests below it a couple different bars. But that's why I use closing stops, end-of-day stops. I don't react to intraday action. If I'm using a daily chart, I'm just using that low. It tests for about a week and a day, and then boom, it snaps right off of there. This was last week. But notice, even if it's testing below there, you just use your price stop off of the low of that bar, and you stay with that. That's how to be successful in the markets, not overreact to intraday moves if you're using a daily chart. If you're using an hourly chart, then you test this every single hour's close. If you're using a 1-minute chart, you can't get up to go to the bathroom even because you got to watch every minute close. I really like, if I use intraday charts, the 15-minute is my lowest I'll go, and then the 60-minute. So basically, that's what we're really after, is that type of a consistent type of a mover. So, and hopefully the sound is being captured better. Somebody said they had a sound problem. Hopefully on the link that you get, hopefully it will sound better to you on the link if you have any problems on your end. Next chart. And while we're pulling up the chart, basically, someone asked, can I scan for trade setups with my indicators? Based on Metastock, you can. You can actually do explorations, which is one of the real powers of why I chose Metastock for my coaching program, is basically that, you can actually do explorations for every individual indicator, and then you can even create your own combinations of different indicators based on the way that Jeff and his team built it in. It's 14 different, and then you can also add combinations to build your own of my unique indicators and tools as combinations of proprietary strategies. So what we're looking at here is we're looking at a situation in which what we're talking about with percent R signals is that I'm usually looking for 20 to 30 bars for a good signal in my experience. If you think about what that means that basically on a day trade, that means you're in and out by the close. And basically, we have a situation in which there's 390 minutes. If you add that up, we're looking at roughly 28 bars on a 15-minute chart every day. Well, if I've got 20 to 30 bars, that means that a 15-minute chart is just about ideal for getting in the morning, getting out by the close on a really good signal. So that's what we look at for day trades. For swing trades, 2 to 5 trading days, typically, again, what does a 60-minute chart contain? With 390 minutes in a day, you're looking at basically 7 bars that are contained in that day. Well, that means that over 4 days worth of 60-minute bars, that'd be 28 bars. So that means that roughly a 60-minute chart should encompass about a week or just less, just slightly less, on a really good signal. So that's why I use hourly charts if I'm swing trading. And position trading, of course, of about a month or so, well, then that's going to be a daily chart. So what we're looking at here, this is just another really unique indicator I developed through a lot of testing, and it's called the DMI difference, which you see up here in the top left chart. This is Novastar Financial, NFI. This was one of those stocks that was dramatically affected by the whole subprime fallout. And you notice the big breakdown in the acceleration bands. The lower band is violated back here in mid-December. And then you see how we just keep on trending down, holding beautifully under the bands. I started testing this DMI indicator because you may have heard of DMI. It's a directional movement indicator. Wells Wilder developed it. It's also used in conjunction with the ADX, or average directional movement indicator. But what I notice is that if I just subtract DMI plus from DMI minus, that I get a real nice overall reading. And when I get into super strong trends, just like what I showed you on percent R, if I break a pretty wide threshold, in this case the minus 30 level, which happens, we break just under that with this royal blue line right here on this low, and then the very next bar it closes below that low. That tells me something unusually weak is happening here. This is a very negative trend happening, and that was signaled all the way back in mid-December, before the holidays. Well, basically, that's telling you something's not right. Something's basically working to the downside. There's heavy selling pressure, and every time you see one of these tests back into that, above that minus 30 line, that sets up another bear retest where you could add to a position as long as it doesn't close above that high of that bar from the 28. And basically, you see, we test into it for a couple bars, and then we drop again. And then we see we come right into it again here back in January, roughly the 11th. And that's also another great retest. Notice our next retest happening right into it right here. That's happening about late January, about the 25th. That high is not taken out, and we kind of flatline, but we don't break it on the close. We get this big short covering rally day back on about February the 7th. That's where we test above the minus 30, and then boom, that's another great re-entry point for the bears. So every time you get these retests, it gives you a wonderful spot to get on the trend, and you can see the big breakdown in February and March. It's just a very powerful trend down. Even though you get little pops back into the bands briefly, that's why I use now these retests. The bands were my first indicator, but I use these retests as a great point to tighten your stop. So you can see that the last point that the stop was tightened was right back here, and that was finally violated back in mid-March. And ever since then, the subprime stocks have been kind of gradually working higher, chopping around. The bottom line is I want to participate on the strong move down, but then after that, I want to get back out. So basically, that's what we're really looking for here. And so from that perspective, unfortunately, it doesn't look like I have buy-sell arrows, but you can just see that, you know, the basic idea is that we would be looking for these type of moves on these retests. So that's what I'm after, is those type of setups. Okay. So, you know, you can see it looks like I've got a drawing tool, but you can see every one of these tests, if I was marking them, let's see if I can kind of mark them. Every one of these tests that we test into, you can basically see would give you points at which you would really want to consider shorting the stock. And then, of course, this last test was the one that was violated right here. Every time that it went back above that minus 30 line, that's what gave me the basic opportunities. So basically, I use the options on the instrument. What I tend to do, and I've got a slide in here on it, is I tend to use in-the-money options. So like if the stock is trading here about $27, right into that retest, which is happening, as you can see, right into that resistance off of this particular retest right there, that resistance holds, we're at about $26. I'm looking at the 30 strike options at that point. Same way, you know, on each one of these retests, that basically each one of these tests basically holds as the high for that particular move, and you can just see how nicely that holds as resistance on every one of those tests. So basically, every time you come into that test, you want to basically be putting a bear trade on in the money option, and I've got a slide on that here in a moment. But the basic bonus indicator I'm giving you here, which is also available in the Metastock platform as the Big Trends Toolkit plugin, is the percent above the 200-day indicator. That we went back, somebody told me, well, I didn't buy the stock because it was more than 100% above its 200-day moving average. So, well, that's an interesting point. Maybe it's too overbought, or maybe it's not. Maybe that theory is totally faulty. Maybe it's a good sign if it goes that far above its 200 days. So, like everything, we went through some very extensive testing, and we said, okay, well, actually the result after I tested all these stocks that went over 100% above their 200-day simple moving average was that actually they go up much more. I use the analogy of lifting off into orbit. It's almost like, where's the most energy expended if you're getting a rocket ship off the ground? Most of it is expended right there at ground zero, right there at the landing pad. And you see, that's because the Earth's gravitational force is so strong, it's going to take greater force initially to get that rocket off the ground, away from the gravitational force, and the further away it gets from the Earth's gravitational force, the more that thing can lose its boosters and basically start coasting once it gets into orbit. So you're away from the gravitational field at that point, you can basically see that thing coast. That's what these big stocks seem to do as well. So here's my rules. Once a stock goes 100% or more above its 200-day moving average on a closing basis, then I've got to see a close above that day's high to generate that all-important confirmation of a new buy signal. And I use the first set of bars low on the day it crossed above the 100% threshold as my first stop. If it crosses back under the 100% above the 200-day line, then I would set a new stop at that day's low. So if we close below that day's low, that would get me out. So let's look at an example. And here's a recent example, and then I'll show you a current one that I like based on the current markets here. But this is Terra Nitrogen. T and H is a symbol. Again, this is an example, so this is for educational purposes only, but the bottom line is that we're here looking for opportunities. You can see this is the 100% line over here. And you can see basically how that's set up. That blue line means that I'm not even interested until I get my setup bar here. It's got to close above that bar's high, which actually happens on the very next bar here, right about $70. That was my buy on the very next bar. That's your up arrow, if you will. Okay, so basically what we're looking for then is, okay, it's a take off, or notice what happens instead. It crosses back underneath. That sets a new stop here back at about $65. I draw a line across there. It holds there, and it retests yet again right into that test back at the end of April. And then look at what happens. It holds. It never violates, and then we're off to the races. It just takes off to the upside. So that's a move from a buy point of 70. The stop was 65. And basically, so you had 5 points of risk. You went from 70 to a hair under 100, so you had 30 points of upside. So in that case, thus far, about a 6-to-1 reward for the risk. Well, where do you set your next stop? Well, look at the next time. I was doing a Vegas seminar in mid-May. We didn't quite get it here in the first test in May, but we did get to test back under the 100% threshold right there. That was set at a new stop, just right at about $80. So basically, that's where we had a new signal, and that's where you would raise your stop, and you can see what's happened since then. It's gone up yet again up here to come back and retest this near this. So, it's an example of, even in a pretty choppy market, that's been a very, very good example of a very strong trend with very manageable risk. So then when I was on Fox News about a week and a half ago, I told them about this new stock I was finding. Of course, I was talking about fundamentals on that show, but the technicals are really driving this next trade. One sec. So here's the next stock. This is TBS International, ticker symbol TBSI. And this is a shipping company based out of Bermuda. But they're basically shipping South America routes, China routes, Mediterranean routes. So it's basically global demand is driving this whole tanker story. Tanker rates are up about 35%. Earnings are up as a result strongly. And the bottom line is that this is a big opportunity to the upside. But you can see some would say, but look, it's already come all this way. Why would you buy it now? And I'm saying, well, the point is that you're lifting off into orbit. You're betting that this thing is just starting to take off and take an even more parabolic effect and go even more dramatically to the upside. Well, let me just undo that so I can show you where I got that signal. Well, there was the first setup right in this neighborhood about $19, and then we were confirmed bullish on the very next close here at about $21. So that's where we got the new buy setup. Now notice we have not gotten our retest yet. It's entirely possible, and this stock did have a little pullback at one point where it came back down, and we actually, with this market pullback that the overall markets have had, that TBSI has in the last week, this was from about a week ago's chart, and basically if you look at TBSI today, today it closed actually right back near the stop level. It closed at $20.50. So we've come back down right into this area here about 2050, and what that indicator's done is it's also come back right into this area. It hadn't quite gotten back to the 100 threshold, I think, but it's extremely close. So I'm betting, kind of just like our original stop was back in 19, that we're about to reset another stop down here somewhere near the $20 level, and that's likely, in my view, to be a good low-risk entry point. We update our subscribers on these kind of trades whenever they hit a stop. We reset our stop. We alert subscribers to that. Of course, with Metastock, you're able to do it yourself as well. But, Weekend and Big Trends do a whole lot of things for you, whether it's helping you with coaching, whether it's helping you, in terms of interpreting this type of charting platform, which I just love the Metastock platform, and or whether it's doing specific recommendations based off of my indicators, and then following that through every night and nightly email reports and even intraday email updates for the more active traders out there. So there's a lot we can do for stock and options traders in particular, which is really our focus, stock and index options as well as individual stocks. So that's basically the core of my presentation. I wanted Jeff to tell you a little bit about the presentation. Where I exit is every time we reset one of these stops, then if we close below that day's low, I'm done. I get out. So that's how you keep tightening your stop. So this one's just about to give a stop right here near $20. So in all likelihood, if we close under 20, that's what's going to basically set my next stop and get me out if it closes yet again below that low. So it's a way in which you tighten, but you also give yourself a chance to ride the big winner, the big trend, when it's working in your favor, as this one is so far on TBSI. So remember, if you'd like to get a copy of the slides, you can email me directly. There's my email address that I circled for you, Price, Price, @bigtrends.com. And just don't forget, if you're interested in whether it's the plug-in package or whether you're interested in specific recommendations, or if you're interested in our coaching in which we help you work through working on Metastock, working on all the key pieces of the puzzle, just email me, and when you ask for the slides and the title, also feel free in the email to ask about more information on our coaching or recommendation or charting or any of our other services that we offer. So at this point, I'm going to hand it back over to Jeff. I look forward to staying in touch with all of you. I appreciate you bearing with us in the early stages of me and my somewhat technical challenges, but don't forget they're going to also, Metastock's going to be sending you a copy of this whole presentation so you can study it. But I do want to give Jeff a little time to tell you about the special discount on the Big Trends Toolkit plugin. So I'll hand it back over to you, Jeff, and thanks everyone for having me. I hope to see you back again here real soon.